Welcome to The Roll Forward, a podcast for the next wave of finance leaders, especially those looking to transform their roles by making smarter, faster, and more profitable business decisions using the power of technology and a forward-looking approach to finance. Listen in to learn how to get out of the back office trenches and become a more strategic partner within your organization.
Hello and welcome to another episode of the Roll Forward podcast. My name is Joe Michalowski, and this episode is brought to you by Mosaic, a strategic finance platform that transforms the way business gets done. And today, my guest is Nick Tarnoff, VP of Finance at SupportLogic. Nick, thank you so much for joining me today.
My pleasure. Happy Monday and happy following Easter weekend and Passover and other holidays that occurred. And happy beginning of the golf season with the conclusion of the Masters yesterday.
Huge weekend, holidays, family, Masters. Gotta love it. It's a great time. I think right before we started, you mentioned it's kind of like the kickoff of spring, which is a welcome change from, getting dark out at 4 o'clock in Boston, me just freezing every day. Hopefully a turn of the warmer weather. But yeah, really excited to have you here. Before we get going, get into our main topic, do you mind just giving everyone the quick background about yourself, the work you do at SupportLogic and all that?
Yeah, absolutely. My pleasure. So I've been at SupportLogic for about a year and a half. I'm the VP of Finance. So I lead all finance and accounting activities here. And like I said, been here about a year and a half. Fully built out team from when I joined, lead all of our kind of strategic finance, including the Mosaic relationship, budget, capital allocation, and investments. And then also I joined SupportLogic after about 6 years at SAP, all focused on the SuccessFactors and Qualtrics employee experience businesses, supporting senior leadership for those teams as well. Have about 15 years of finance experience and joined after undergraduate from Boston College and a grad degree from Emory.
Nice. Always happy to meet somebody from the Massachusetts area. So I was excited about that. You and I know each other for a little bit, so I knew that coming in, but I think you're the first person from my neck of the woods on the podcast. So nice to have you here. Also, our big topic today is going to be all things customer retention. And, it's a big part of what SupportLogic does. It is the definition of what SupportLogic does. But I didn't realize that you were coming from that background at SAP as well, kind of that customer success side of their business. So yeah, really excited to kind of dive into that. I think what I want to start with is just sort of setting the stage. So I want to know, why should retention be top of mind for finance leaders all the time, and especially in this current economic climate that we find ourselves in?
Retention is a key metric and a key component of, stepping back from the metrics, a key part of how you do business, especially in the subscription-based economy and SaaS businesses. You put a lot of time, effort, energy, and resources, all organizations do, into acquiring customers and into acquiring revenue. You need to be able to nurture those customers and nurture that relationship so that they stay and become long-term contributors to your organization and to your overall bottom line. The long-term value of a customer, regardless of if it's a B2B or B2C customer. I spent 2.5 years supporting Staples e-commerce business, which is much more B2C than B2B, but we're still looking at what is the long-term contribution of that customer once acquired. So the key is making sure retention is so critical because, like I said, time, effort, energy into acquiring investment dollars into acquiring those customers. You want them to be customers for a long term so that they pay back and so that they hit a point in their life cycle where they become profitable contributors to the overall bottom line of the organization. And in many respects, it's much less expensive to nurture and to keep a customer than it is to initially acquire a customer. That's one of the key reasons that retention is so valuable. There's also qualitative reasons as well. Great customers, they become your largest advocates and one of your biggest selling points. One of the things that Mosaic does exceptionally well is they treat their customers very well. And so we become some of their largest sellers and advocates in the marketplace. SaaS and technology and who you use for services can also be spread word of mouth. It doesn't necessarily have to be marketing driven. And so that's another reason that retention and kind of providing a great customer experience is so valuable.
Yeah, I think it's It's a really great point. Hey, I'll take the knock against marketing as much as that is my job. I will appreciate any bit of word of mouth we can get. It's okay. We don't drive all of the marketing of the business.
I would say it's listen, I wouldn't take it as a knock. It's more of it's free marketing.
Yeah,
When you
we love
put
it.
folks in a room who are using a certain solution or using a certain tool that they're talking about, that's free marketing. So it's almost add on top of all of the efforts that you and other marketing teams are putting out into the environment.
Yeah, free marketing is the best kind. So we appreciate that. The business appreciates that. I think what you're saying there's this cliche statistic that I think everyone's realized is not actually proven, but the idea is sort of what you said, which is like costs 5 times more to acquire a new customer than to retain an old one. For a finance podcast, I don't think those numbers really necessarily are uh, proven in a report somewhere, but generally, I think the spirit is what you were mentioning. But what is interesting to me is that I think even though people know that, outside looking in, it feels like this an area of investment kind of flies under the radar. It's why we were talking about. It's why we did that. What we talked about in that webinar with you a few weeks ago in SupportLogic, and I can
Mhm.
link that in the show notes. But is that true? Do you think that this kind of flies under the radar for finance leaders as an area of an investment?
In terms of investing in retention or in terms of investing in, I guess, the teams to support
I guess
customers
all of the above. I
post-land.
mean, we'll kind of dive into it as we go, but I mean, it's if you're thinking about where to place the dollars in the business and where to put your money, yeah, just curious if it's just something that's kind of a secondary thought at the moment.
I wouldn't say it's a secondary thought. I think, net dollar retention and customer retention have always been key tenants. It's looked at differently in different businesses, whether you're a go-to-market sales led or product led. And, whether you're doing high volume, low ACV, low ARR deals or lower volume, higher ARR, high ACV deals, as long as your investment approach to acquire customers and your go-to-market approach kind of are rowing in the same direction, you should be able to get those numbers to kind of coalesce together in terms of customer acquisition cost payback, et cetera. And definitely, I think, investors have always looked at net dollar retention, customer retention, those types of things, because it speaks to the quality and the stickiness of your product. And investors always want to invest in products that are sticky, challenging to rip out, but also where you have high customer satisfaction in terms of usage. So I don't think it's a rotation there. I don't think that's anything new. I think it's a kind of double down and hyper focus on it because there've been numerous studies shown and a number of different kind of research that over the last kind of 12 months, sales cycles have slowed down. They've gotten more expensive. You're having to put more resources towards acquiring a customer. But if you've already overcome that barrier to entry, then it is typically a lower cost to maintain service and support that customer. If I recall correctly, Ray Reich just put out his benchmarks, and I think this was the first year where they split CAC into CAC kind of dollar focused of net new and expansion.
Yep.
And the expansion was like 50 or 60% less on a dollar basis. So 40 to 50% more efficient to acquire a dollar from an existing customer than acquire a dollar from a new customer.
Yep.
So those are the types of things that I think finance leaders are weighing, that if you have a very happy customer base, it takes less dollars to invest to expand them than it does to go find a new customer, especially with the scrutiny that finance leaders are placing around new spend. And where so many finance leaders, myself included, are looking up and down our technology stack to reduce spend, focusing on those customers that have been part of your base already is an easier place to go. It's a lower hurdle and a lower barrier to entry in terms of both protecting but also expanding revenue.
Love it. I think makes a ton of sense. It's what we notice as well. And as you said, Mosaic Company invests pretty heavily in success and support. So personally love this topic. Excited to sort of keep diving deeper into it. And where I want to start sort of getting a little bit to the next level is where you even begin. So, you listen to Nick's explanation. Nick is saying, hey, this is a really important area of investment. You already knew that, but it's even more important now. Uh, let's say my retention numbers aren't what I want them to be. Where do I start as a finance leader to sort of help impact those numbers, improve them in the business? What are some of the analyses I can run? Where, if I'm Nick, where am I starting? Where am I going to put my thoughts at?
Going back to the piece I mentioned, it to some extent depends on your go-to-market motion. So if you're a business that's PLG, high customer, high volume of customers, run cohort analysis, to see, do you start to see trends based on when a customer started, what size they started at? So start to cohort and create kind of behavioral trends that you start to see. In my mind, I would do some of the analysis work ahead of time so that you're going in with a perspective. So cohort analysis. Then again, if you're larger customer to enterprise led, you can look maybe more customer based by customer to see, are you seeing in the enterprise space, hey, I'm seeing this type of trend, or enterprise customers are displaying this behavior, or customers that started at a specific point and it took them, twice as long to get implemented, are, you know, struggling in terms of adoption and usage. It also depends on what type of model do you have. Do you have a license in an ELA and kind of seat license model, or you have a consumption and adoption model? Those take different type of support as well. Then I would take the analysis and take kind of the data, talk to your head of sales, talk to your head of customer support, talk to your chief customer officer, and say, hey, here are the things that I'm seeing in the data. How does the data match up anecdotally with what customers are telling us? At the end of the day, we're all customer centric businesses. We have to listen to our customers and to listen to what they're telling us. So the data only tells part of the story, and it can help you formulate at least an opinion and an approach. But then it's match that up with what's happening in the real world, and match that up with what are the stories that the customers are telling our CSMs. What are they happy with? What are they not? Why are they using? Why are they not? And match those two things together to create a strategy going forward of, do I need more CSMs? Do I need more focus on adoption? Is there something in the product that needs to be adjusted to maybe pull people in a little bit more? So I would say it's a mix of kind of, and finance is this way, finance and accounting, it's a mix of art and science. The sciences do the data, use your tools, whether that's Excel, Mosaic, something like the Google Sheets. Use your data, and then talk to your leaders cross functionally. Talk to your product leader as well, included in that kind of conversation mix, and see what those things start to tell you, and be able to drive strategy from there. There's not a one size fits all approach, but making sure that you have that you have an informed opinion is critical in terms of being able to drive anything forward.
Yeah, I love that so much of that explanation was rooted in the collaboration aspect of it, because it's what we hear so often from guests on this podcast. It's what I've always heard from, our founders as I try to create content. Everything about like modern finance is rooted in collaborating, partnering with those across the business. So really like that, obviously it starts with those analyses. It starts with that cohort analysis or that like behavior trend, but it moves pretty quickly into make sure you have the perspective from everyone else. So yeah, really, really like how you explain that. I think one thing that I want to get into, and before we're going to talk more about the collaboration, things like that, but you mentioned net dollar retention, you mentioned gross dollar retention, logo retention, you mentioned all of these metrics already. I don't think those will come as like a huge surprise to anyone. I am curious if there are some like less common metrics or things that you look at for SupportLogic, or you've seen other companies look at in retention, or for retention analysis, that maybe aren't as typical in that list.
Not really. We have primarily focused on the main ones: net dollar retention, gross dollar retention, CAC, LTV to CAC ratio, CAC payback period's a big one. Making sure your ability to be profitable and to get, deal level profitability is critical. One of the things that we've had to look at customer retention on a not just dollar basis, but logo basis as well. So we look at the main things and then kind of cohorting it out a little bit by starting ARR size to be able to see, you know, our 100K customers, how are they expanding? How are they behaving against our 250K or 500K customers? One thing that we've had to do is we made a rotation kind of from license-based and seat-based sales to adoption and consumption-based transacting this past year, kind of middle of last year. And so one of the things that we've been working on is, and kind of working our way through, is how do we project LTV forward for variable revenue, where we don't have 100% certainty on what that customer is going to be spending 12, 18, 24 months from now. What are the data points that we need to collect so that we have a proxy for what that expansion looks like? Whether it's, hey, we sold into a large enterprise and we're only at one of their, the SAP, for example, SAP has kind of 7 or 8 portfolio companies. We only sold into one of them. Okay. I can look at that and go, all right, if we sell into 3 of them, this is what revenue may look like. If we sell into 6 of them, it's what it may look like. So how do we kind of create those proxies? So I think that's what a lot of finance leaders are thinking about now. I think Ben Murray's done some writing on it, thinking about LTV on a variable revenue basis. So that's probably the biggest one that we've had to make a rotation towards and adjust for, is thinking about how do we look at LTV in concert with our new sales model and I guess post-land model, so that those things match up. Because for a consumption-based model to work, the amount you sell your customer at on day one is ideally not where they're at 6, 12, 18 months from now. Because if they've stayed level, then there's other concerns that you'll have in the business.
Makes sense. I think, what I want to, the next sort of batch of questions or sort of topic I want to cover is challenges. And what I like is that right at the start of that, you were like, okay, well, like the fundamentals are kind of all the same. Like a lot of these companies, like there's not some out of left field metric that you're going to tell people like, hey, if you're not tracking this, like you're not going to have the right idea about it. And so the fundamentals are there. Everybody knows what they are. And this still isn't easy. So what are some of the challenges we face in doing this? It sounds like, aligning it with your sales model is one of them. And I'd love to hear more about how you've solved for some of those challenges and what you've done moving forward. But curious, just on a high level, what challenges we face if we're sitting down, we're running these analyses to see where we can improve retention. What roadblocks am I going to hit? What am I going to struggle with? And, what do I do about it?
Some of the challenges in roadblocks and retention, one of the ones that I saw both at SAP and I've seen a little bit smaller sample size, is when you have delayed renewals. So when I was at SAP, I spent 3.5 years supporting a dedicated renewals team focused on call it $1.5 billion book of business at SuccessFactors, where roughly 300 to 500 million was expiring contracts in a given year. And where you start to run into challenges is when a renewal gets delayed because sales is involved, or renewal gets delayed because there was late engagement from a renewal executive, whatever it may be. And you start to see lagging trends. You see, at a bigger sample size, those things kind of normalize. Smaller sample sizes, you'll start to see NDR drop or gross dollar retention drop, and making sure that you're aligned with the business and understand kind of the qualitative reasons behind it of, hey, we're in the midst of a renewal discussion, but we're trying to upsell or we're trying to do an expansion. Don't, either pull them out of the NDR set or assume they're going to renew at X%. So again, it goes back to the art and science of not just taking the numbers at face value, but taking the numbers and then and being able to ask questions, having visibility to those numbers for not just yourself, but for your sales team, for your customer success teams and those leaders to say, all right, here's the things I'm seeing in the numbers. There's something that doesn't look right. Can you tell me the story behind it? And even if you're not going to fix the number or kind of fail it, you at least have the bullet points behind it to explain the why. And in a lot of cases, the why and the narrative is almost more important than the number. So I think those are the challenges, is like where numbers don't tell the whole story, and where you have to take that and know your business. And if you know, you can start to see it. If you start to see trends, I was able to see it with, when I was at SAP. All right, I've got these 20 customers. They're all 100 CSAT. They're going to renew, or NPS, but they're dragging their feet because they're slow in procurement, or I know, here I have the expansion forecast and I can match the two of them. And I go, okay, I know there's expansion opportunities. I'll either pull them out of the data set, or I'll just basically assume at 100%. I'll highlight it in my forecast so that I can have that conversation with somebody and say, hey, is this the right assumption? And then be able to carry that forward. So the challenges is, I think in my mind, are where the data doesn't tell the whole story, and what it forces, again, to your point earlier, or to the point we were discussing before, is it forces that collaboration. It forces that asking the question, go to the person, or the team that owns renewals, but also owns the expansion or upsell discussions. Use the data around you. You may have to join some data sets, but making sure to ask the questions so that you can create an informed narrative and an informed opinion.
Yeah, once again, love that it all ties back to that collaboration theme, and I think that challenge is a really good one to highlight. And there's two others that I want to sort of follow up with, and one of them just comes from what you mentioned before about the shift to consumption based. And a lot of the people that listen to this, a lot of people that we talk to as a Mosaic, are high growth startups. Like, there's a lot of change in the business model. So like the examples you have from SAP are really cool for like the scale, but I'd imagine there's probably a handful of people listening to this that might change their pricing at some point. And so
Sure.
I'm curious, what are some of the challenges you face with like historical data? Like, I know what you were talking about mapping moving forward. How are you going to figure out LTV on a variable basis? But how do you look backward at your existing customers? Like, if you're trying to transfer them to the new pricing model, how do you think about retention for where they were before, their lifetime value for what they had previously, as you make that shift?
No, those are terrific questions. So we looked at kind of three different segments of our business and of our existing base when we made that rotation. So let's take out new customers and new customer acquisition, because that was a different challenge in terms of CAC payback, and how we invested in acquiring net new. But we did an analysis of our existing base, and we said there's a portion of those that won't change. They will be seat license based, or they will be ELA based, unlimited credits, for the large, called Fortune 100 companies, or our largest customers. There won't be a change there. There may be an unlimited, credit model, but for the most part, that isn't going to be adjusted. Then there's a middle segment where we said, we think these customers are, they're kind of two segments of, okay, if we rotate these customers towards consumption based, some of them will use more than they're currently provisioned for. So that'll be an interesting conversation. And some of them will use less. And some will, some of them, the ones who are using less may be like, hey, why were you charging me too much before? So then there's a managing of that customer relationship. The ones who are using probably more, there's a how do we ease them into the new model, or do we just kind of leave it alone until they come up for renewal, until we're less of a hybrid and more of a everybody's on consumption base. The other thing is being able to, for those customers, show them the data, show them what they're using, show them how they're using the tool, the solution, and make them feel like the value they're getting from it, that at this point they're getting a deal, that they're getting way more value from it than we're actually charging them for. And so then, go in and manage that. And then there's the customers who, we were having some challenges with, and this became a save mechanism for us. that, hey, we know you're, challenged in this. You got up and running late for whatever reason, rotation dragged, you know, you haven't fully utilized all the modules. You didn't have them all turned on in your selection. Let's just rotate you. And now you're on consumption based. And maybe we open the eyes for those folks to something that they weren't using because they didn't provision it initially. And so then it becomes, our customer success team going in, working with those customers and helping them, you know, take advantage of the new parts of the solution and driving adoption and driving consumption. So we had to kind of look at all parts of our business and all segments of our customer set and figure out kind of where everybody would fit and then be able to drive strategically, kind of drive the narrative and drive the playbook for each of those different segments. So it's been a fair amount of it's been interesting, but it's been also a fair amount of work, and it's put a lot of stress on the chief customer officer and our customer success team, and those folks have done an amazing job. Like they have a ton thrown at them, and in a usage based model, they are equally, if not more, critical to the success of revenue and success of the business than our customer acquisition, and even more so in an environment where sales cycles are expanding, or sales cycles are lengthening, and customer acquisition is even more challenged than it has been previously.
I love that we got a chance to dig into this because, I think that shift in pricing model is a huge challenge for a lot of companies. And, I didn't realize going in that we would go there, but really, really enjoyed that explanation of how you all have handled the transition. So really love the explanation of all the challenges you face in consumption-based pricing, making that shift. Love the spotlight being on chief customer officer, head of support, things like that. The other challenge I wanted to ask you about, and this is less about the pricing shift and more just in general and for any company, is thinking about investments in headcount in CS. So for something like sales, like you can do capacity planning, and maybe you have assumptions built in for if we have this many new customers, we need this many new reps, but it's still, it's still a challenge to figure out what the ROI of those headcount investments are. And so I'm curious how you think about, or you think others should think about setting that assumption and how it scales as the business grows, because I'm sure it changes over time.
Absolutely. No, it definitely does. When I joined, we didn't have a dedicated kind of support team. We had a number of folks in engineering who were being borrowed for their time. We had a number of CSMs in the organization, but we didn't have kind of a bug fixed team. So our chief customer officer, Judy, when she joined, that was one of the earlier things that she said is, hey, let's add a customer support team that does all of the kind of little technical bug fixes and can take a lot of things off the plate of some of our other more technical resources that we need in different places. So she took a look at the whole list of customer support or customer success organization, including some of the engineering folks. We built out a full onboarding team. So she's really done a great job of like sectioning out what are the roles and responsibilities and what do we need in terms of building that customer life cycle, really from kind of the way I describe it is ink to live to adoption and usage, and thinking about for each customer that we land, what is the burden placed on her team or on the team and the different roles there, and then being able to map that forward and say, if we acquire 15 customers a quarter, if we acquire 20, if we acquire 25, here's what we need to adjust. But also creating a flexibility that if we either acquire more or less, we have the ability to adjust that. So one of the things we've looked at is what is our CSM ratio? How many customers do we think each CSM should be able to manage? But then we have to normalize for a smaller customer versus an enterprise customer. A small startup joining, an SMB who joins is not the same as when we sign Salesforce. So we also have to normalize for size and time burden of a given customer appropriately. So there's a lot that goes into it. And then the CS folks, it's, how do we measure the ROI? It's customers retained, revenue retained. We're now going to start to see adoption. So credits consumed versus credits purchased. and being able to see kind of credit usage patterns. A lot of that data will be things that we can pass along to the customer organization and say, hey, these customers are doing a great job using this solution. These customers are using this other part of the solution. What do we need to either understand that say, hey, some of these customers don't really care about the other parts of the solution, or they don't realize that there's untapped potential. So also being able to start to kind of cohort out based on customer type and then customer usage patterns and being able to put those things together to instruct whether we're developing training manuals or what is the playbook for usage, being able to work with the CS team on that to be able to bring that anecdotal data back to the hard quantitative data and match that together. So there's a lot of ways you can think about the ROI on CF. At the end of the day, it MPS, CSAT, happy customers, revenue retained, customers retained, because those are the tenets that, and in our case, NDR is probably as much a gross dollar retention and net dollar retention as much CS metrics as they are sales metrics, especially where we're thinking about adoption and consumption. Being able to expand that probably going to live more. It will live more with our customer success teams than it actually will with the AEs and the sales team.
Makes a ton of sense. I think it's something that I've heard in every answer, and I'm excited because it sort of planted all these seeds for the next question I have, which is all about collaboration. I want to hear your tips for effectively working from finance with leaders in customer success and support. I think there's been a lot that you've mentioned that can speak to that already, but I would love to focus specifically on how you build those relationships, because what I've always heard is that like finance and sales, they're in lockstep. Like those two leaders are always the right hand. As finance leader, you're like the right hand of the CEO. And so those are kind of the hallmark relationships, but I want to put a spotlight on the finance CS relationship. So I'm curious, what tips do you have for people to sort of build a better bond there and work together more effectively?
I think it's a couple of things. It's coming, many of us, myself included, I come from a go-to-market sales FP&A background. So that sales forecasting, those types of things, I understand it. But I also do in my tool set have that renewals background. I understood, having done it for 3 years at SAP, what it meant to provide a great experience for a customer, what it meant to not provide a great experience, and then how that trickled down into the financials. So I think for me, the way I was able to build that relationship was take some data, come in with an opinion, but then be vulnerable and ask questions, because I don't know everything about customer success. I can't talk to, and I don't, at SAP, I couldn't talk to the 2,500 customers. I could talk to a handful of them. So it's also come in with, humble and with a perspective, but humble and asking questions to say, here's what the data is showing me. How does the data match up with what customers are telling you? So bring a perspective, bring an informed perspective, but also do it in a way where you're saying, hey, I value what you as a CCO or the customer success team is bringing to the table and the information that you're hearing from customers on a daily basis. How does the qualitative narrative match up with the quantitative narrative, and be able to marry those two pieces together? So it's, come in with some information, but come in humble and be willing to ask questions and be willing to learn.
I love that. I think it really resonates with me because, as somebody, I work in marketing. I don't have a finance background, so I come in and I have to talk to people like you and learn about finance. And I've always had more success just, anytime I go talk to an SME of any kind. It's just kind of admitting what I do and I do not know, and leaning on the expertise of the other person, because I would totally agree is that if you're not humble in those conversations, if you're coming in trying to be the expert, it kind of hurts that relationship. So I think it's probably good advice for any relationship in the business, but I like it in this context of the CS side as well. Nick, we are coming up on time quickly, so I've got 2 higher level questions that I want to get to, and then we can kind of wrap things up here. The first, very much in SupportLogic's wheelhouse, I want to talk about tech just for a minute or two. And so we've talked like headcount, we've talked relationships with people in the between finance and CS and support. And I'm curious how you think finance leaders should think about investments in technology to help support those teams. How do you think about the ROI of new tech, new platforms, new software that can help drive some of the stuff you've talked about so far?
Absolutely. I mean, as a finance leader, the same thing when I'm evaluating technology from the finance space, there's really two elements that I go to in terms of for my team thinking about it, especially where we're not kind of revenue focused. For me, it's time and it's expense. And so what technology can I invest in that will either save me more time that I can use to do other, more strategic things? And what's the value of that? Or if I'm making an investment in software, does that replace needing to add additional headcount or additional hours for whether it's full-time headcount or contingent headcount? So that's the other thing is what are the efficiencies I can gain from a technology investment? I think the same can be said for customer support and customer success. There's a revenue element to it that, I invest in this technology and it will drive CSAT by 10 percentage points, which likely means protecting X amount of revenue, or, hey, if this solution yields providing a better end customer experience, customers see 10%, an additional 10 percentage points in gross dollar retention or net dollar retention or renewal rates. Okay, let me take that. Let me take that against the customer's basket of customers. Here's my revenue potential saved by, an investment in this solution. So it's understanding the solution and understanding the lane it plays, but it's either going to be revenue protection or revenue expansion or cost component, and then time and efficiency component. So those are the elements that I like to think about when I'm investing in technology. And then when others are investing in technology, those are the pieces that I say, hey, focus on these in terms of building your business case to make a stronger business case for a technology investment, whether it's budgeted or not.
Love that. And I think we could probably talk all day about that. We could definitely talk for an hour because I know that because we already did it a few weeks ago. SupportLogic had a great webinar. Our co-founder was on it. I will link that if there's an on-demand version in the show notes. So if people want to think about making the business case for CS investments and tools, I will definitely give you the tools to do that. So like I said, the last question I have for you, very much zoomed out. I ask everyone that comes on, if you ever listen to people might be sick of hearing me ask it, but it's my favorite question, so I'm going to keep doing it. I'm curious, what is one thing that you know now that you wish you knew at the start of your finance career? That's how we'll round things out here.
I think one of the things is that precision isn't everything, especially when it comes to numbers. And a lot of times we as finance and accounting folks get hung up on making sure the number is air quote right and precise to a decimal point or precise to, 3 decimals or this thing. And I would say that precision isn't everything. Yes, you need it to be generally, the accuracy and integrity of data is critical and it's important. It builds your credibility. But if there's hey, let me spend about 15, 20 minutes less on the extra piece of the formula, but I can then take that time to being able to understand it, create the narrative and understand the why behind it. Being able to understand the why and explain the magnitude of the number or what the number is telling you and build that story and do the analysis is equally, if not more critical and more valuable to executive leaders and, heads of department than the specific number and the 5 extra decimal points. So I would almost say it like, I don't want to say accuracy is the enemy of complete, but if you can figure a way to balance time and that finding that balance between precision and narrative and telling the story, make sure that those things are a little more in balance. I think early in people's career in finance and accounting, it's so focused on the number has to be precise and has to be correct. And you lose the bigger picture and you lose the scope of taking the investment of time to understand the why and tell the story.
Love that. I think we talk about the why behind the numbers a lot. That precision versus accuracy conversation, I will steal that. We'll probably clip that up because I think that's a good sort of juxtaposition to talk about, and it's a critical one because if you're wasting all your time on the precision and not getting those strategic insights out, you're not really helping anybody. So I think it's a good way to put it, and it's a good way to wrap us up. So Nick, I just want to say thank you so much for being on. I want to turn the floor over to you. Where can people go to connect with you, to learn more about SupportLogic and all the great things you guys do? Whatever you want to promote, the floor is yours.
Yeah, absolutely. No, you can find me on LinkedIn, Nicholas Tarnoff on LinkedIn, SupportLogic, supportlogic.com. We are also running a number of road shows, SX Live road shows across a range of different cities. I think last week we were in Seattle and Austin and have another dozen cities coming up. We also have our SX Live conference, virtual webinar conference coming up in mid-June. Joe, I'll send you a link for that as well to promote.
Please.
All finance leaders or all leaders across support and customer organizations talking about the value of customer support and how focusing on providing an amazing end customer experience is critical to the metrics we just talked about, like gross dollar retention and net dollar retention and customer satisfaction.
Love that. And for finance leaders listening, we talked a lot about collaborating with that side of the business and understanding what they do. It sounds like a great series to be a part of if you want to sort of ingratiate yourself in the language of CS and support. So I will definitely put that in the notes. But Nick, again, thank you for taking the time. I know it's a busy life as a finance leader for any company, especially one like SupportLogic. So thank you for being on the roll forward, and hope we can do it again sometime.
Awesome. Appreciate the time, and have a great rest of your day.
Thank you for checking out this episode of The Roll Forward. This show is powered by Mosaic, a strategic finance platform that transforms the way business gets done. If you enjoyed what you learned in this episode, make sure to follow The Roll Forward wherever you listen to your favorite podcasts, or visit mosaic.tech/podcast to get immediate access to all of the latest episodes.